Hello, I'm Rachel Jones for the Finance News Network. Joining me today from Ausbil Active Sustainable Equity Fund is Chief Investment Officer Paul Xiradis and Head of ESG Research, Måns Carlsson-Sweeny. Paul and Måns, welcome to the network.
Thank you.
Thank you.
Now, first up, before we talk about the fund in detail, congratulations on winning the Sustainable Investment Award at the Lonsec Awards ceremony. What can you tell me about that?
We're pretty excited about that because we have over a number of years been really focused on ESG investment, and certainly we launched a new fund just recently, as inside of 2 years, and to win this award for the fund in a short period of time was certainly a fantastic outcome for Ausbil.
And Paul, can you remind us of the objectives of the fund and your definition of sustainability?
The objective of the fund is to deliver a solid return for our investors, certainly a return which over the medium to longer term equals, if not betters, that of the underlying index. But we also do want to invest in companies which we believe are sustainable in nature, those companies which have a certain profile which means that their earnings will be sustainable over the longer term.
Thanks, Paul. And over to you now, Måns. What are the characteristics of sustainable businesses and how has this changed over time?
Yes, I think when you assess a company, we'd like to look at the sustainability of the business model itself. That's the very heart of it. So for instance, if you find that a company's business model relies on underpriced pollution, underpaid workers, weak enforcement of regulation, or even illegal activities like slavery, we don't think that's going to produce sustainable earnings over time. So we think ESG is particularly good at finding downside risk, which the market hasn't priced in. But it's also about opportunities. The world is changing, the world is decarbonising. That means the energy sector is going to change. We also see risks and opportunities in the commodity sector for various commodities. So it all comes down to assessing what we think the market might have overlooked and not priced in terms of environmental, social and governance risks.
Excellent. And back to you now, Paul. Can you provide an update, starting with the performance?
The return of the fund has been very pleasing. For the period to the end of October, the 3-month performance or outperformance is close to 1.75%. Certainly for the financial year, it is slightly better than that. And for the calendar year, it is close to 4% over and above that of the benchmark. So we are very pleased with the return that the fund is generating.
And what can you tell me about any additions to the fund?
We've been largely adding to our holdings over time. So it's more about just as we get flow in and also we have greater conviction in the names that we have, we've been adding to our position. So we haven't been expanding our holdings by any great extent. But there has been a new addition recently. We've introduced Ramsay Healthcare to the portfolio. It's a sector that we do like for ESG purposes, but it's also a company which demonstrates some of the characteristics that we do like for the longer term, and certainly that is one of the best of breed of its kind, particularly in hospital care.
And Paul, sustainability is not guaranteed. We've had the banks in the spotlight recently. What can you tell me about this?
Yeah, the banks have certainly had their fair share of exposure of late for bad conduct. To some extent it has been quite surprising as some of the areas that they have been poor at, but they are looking to improve that and they have been improving that. The outlook I still think for the banks is such where it will be improving over time. I think they have certainly learnt from their lessons. They are increasing their compliance and also their systems to ensure that it doesn't happen again. And really the banks do play a pretty vital role in the overall economic system. We need to have strong banks in order for the economy to continue to perform well. So from that point of view, it's a positive. But certainly in the near term, their earnings will be under a little bit of pressure as they make these adjustments.
And to the last question now, what is the outlook for the first half of 2020?
Look, we're still encouraged as far as the outlook is concerned for the equities market. Part of the reason for that is we do expect interest rates to remain low, not only for this period but for an extended period of time. If that is the case, good cash flow businesses which can demonstrate sustainability will be keenly sought after, and certainly this fund has a very good exposure to those types of companies.
Paul Xiradis and Måns Carlsson-Sweeny, thanks very much for the update.
Thank you.
Thank you.